Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me is my co-host, CoinDesk Executive Director of Global Content, Emily Parker. Good morning, Emily.
Good morning, Christine.
Fresh off of South by Southwest, let's have a look at Bitcoin right now. The CoinDesk Bitcoin price XVX index is currently at $41,107. Bitcoin is up almost 2% over the past 24 hours, and the CoinDesk Ether price ETX index is at 2811 ETH, shooting up over 5%, and the DFX CoinDesk DeFi index is at 247, soaring about 7% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. So looking at some headline makers right now, the Bank of England is raising its key interest rate up but to 0.75% to pre-pandemic levels, followed by the Federal Reserve's announcement of its rate hike of about 25 basis points. And this, you would expect, may be bearish for Bitcoin, but no, Bitcoin is shooting up compared to gold, which is down, amid news that Ukrainian President Volodymyr Zelensky is signing a virtual assets bill legalizing cryptocurrencies in Ukraine, and they're experiencing a frenzy of crypto donations amounting to about $100 million to support the country's defense against the Russian invasion. So a lot of factors going into the crypto markets right now, Emily.
Yeah, so this whole interest rate hike was a bit anticlimactic in terms of crypto drama, but there could be one of two reasons of that. One, it was already priced in because we've been talking about this for anticipating this for quite a while, or this whole inflation interest rate narrative maybe isn't as strong as some crypto believers would argue that it is.
Mm-hmm. Well, our next guest built one of the essential cornerstones of decentralized finance with Compound, a lending product, and the recently launched Compound Treasury, a pathway for non-crypto financial institutions to earn yields in the rapidly expanding institutional DeFi subsector. Please welcome Robert Leshner, founder of Compound Labs and one of CoinDesk's most influential of 2021. Hi there, Robert. Thanks for joining us. So you predicted that the bridge between decentralized finance and traditional finance will narrow this year. How's that going so far?
Well, it's going great. One of the things that we're seeing is that for the last 2 years or so, there's been a lot of institutional interest and curiosity about the new financial markets that are being created in DeFi. This is the year that we're starting to see a lot of action of institutions coming into DeFi, using custodians, using brokers, and using new products that are specifically designed to act as bridges into DeFi, like Compound Treasury.
All right. So what's the state of institutional DeFi adoption, and how quickly do you see Compound Treasury in particular seeing adoption?
Yeah, so I would say we're right now, if you think about this as like a 9-inning ball game, we're probably in the second inning. It's still extremely early, but there's starting to be some real action. So one of the things that we're seeing is we're starting to onboard a lot of different types of institutions who are interested in the yields of DeFi, but without interacting with a lot of the complexity if they were to use it natively, namely IT, key risk, and the complexities of interacting with contracts. So the customer segments that we've begun working with that have already onboarded the Compound Treasury as examples, we have a bank, we have multiple fintechs, we have multiple different crypto native institutions, and we have multiple traditional Wall Street investors. And this really shows the sort of spectrum of curiosity. And we think it's going to continue to grow. I mean, all 4 of these customer groups are interested and passionate about yield, and this is a new market for them.
Robert, just to get into sort of a bigger philosophical issue here, is there any paradox just in the concept of institutional DeFi, just in the sense that, DeFi is all about decentralization and, it's decentralized finance, and institutions kind of represent the opposite of that. Is there any tension there or not really, in your opinion?
Oh, is Robert frozen?
Yes, I can hear you. Yeah.
Oh, sorry. You just froze for a moment.
I can't hear the other speaker.
Oh, okay. I'll re-ask the question. So I was just asking a more philosophical question. If there is any kind of tension in this concept of institutional DeFi, just in the sense that DeFi is, decentralized finance, and institutions are basically the opposite of decentralized. Is there any tension in there, or not so much in your opinion?
Well, I think it's an opportunity more than anything else. The fact that decentralized finance means that anyone can participate in it. It's open to a huge number of ecosystem participants. But centralized institutions are still the best way to bring lots of customers into an ecosystem. So a great example is, a bank might have, 2 million customers, and they might act as a centralized entity. But when they interact with a system like DeFi, might interact with it as a single entity. So a centralized entity can be a great way to onboard a massive number of end users or end customers. And there is a little bit of a tension in that, they typically operate in ways that they're used to, which is bilaterally or counterparty to counterparty, not by interacting with open systems. But, open systems have a lot of advantages. There's more efficiencies of the economics, they're more transparent, and it's easier to develop new systems on top of them. So centralized entities, in some ways are great participants. And, you can also think of them in some ways as like layer twos on top of DeFi networks in that, they can build their own experiences and services and efficiencies on top as well. So I love centralized institutions getting involved.
While we're on the topic of centralization, let's talk about the U.S. government. I know you've been following regulation pretty carefully. First, I'd love to just hear your take on this new executive order. We don't know exactly where it's going to lead, but I guess what do you think the executive order means for DeFi specifically?
Yeah, it's a great question. So there was really two things that struck me as important coming out of the executive order. The first was actually the significant focus on the study and creation of a central bank digital currency. This is a concept that's gotten a lot of traction outside the U.S., and there's been chatter within the U.S. for a while now. But the executive order was, very heavily focused on analyzing, understanding, and evaluating the potential of a CBDC in the U.S., possibly coming from, the U.S. Treasury or the Federal Reserve. And this was a surprise to me. Previously, a lot of the narrative in the media and on the ground was that, the interest in DeFi wasn't really coming from the direction of the Fed and the CBDC, but was coming in, how do we get involved with Bitcoin? How do we get involved with DeFi? How do we tame these new markets? And so the very large focus on a CBDC was a surprise to a lot of us. And it was, in some ways, it's a delightful surprise because it's a recognition that the administration sees an opportunity to upgrade and overhaul the core payment infrastructure of the United States. So that was the first thing that really struck me. And the second was that overall, instead of the language being focused on the risks of crypto, in general, they were focused on the opportunities of crypto and the need to create innovation safely, cognizant of its role in the society and the broader world. And I think this was a surprise to the upside for a lot of the industry and ecosystem participants because, most of the interactions we had been hearing from the administration so far had been, ones of skepticism. And the EO really was biased in a good way towards an excitement for the opportunities of crypto. So I thought all in all, the executive order was fantastic and, it's long overdue.
Robert, since you mentioned it, do you think the U.S. should issue a digital dollar or a CBDC? Because there's a lot of controversy about this, in terms of privacy protections. And if you had to choose right now, do you think the U.S. needs a digital dollar or no?
I think the answer is yes. If you, asked me to choose a direction, I would say the advantages of it would be significant. Right now, when you think about most of the U.S. Payment and banking system, it's in these closed centralized banks. And yes, they talk to each other, but it's still extremely cumbersome. I mean, look at how horrible it is to send and receive a wire transfer or, even an ACH. It's still extremely clunky and it's far harder and more cumbersome than stablecoins are today. If you look at how easy it is to send and receive USD coin or an equivalent stablecoin, it's, instant and, borderless. Mm-hmm. And so I think a CBDC, if it's done correctly, even if it's done in a closed system way where it's, not programmable necessarily, it will create efficiencies for the participants in it. And over time, those participants can open up programmability and openness to the CBDC on their own. Or, and this is the best case scenario, is that a CBDC would, from the outset, be open and programmable. And you would get all of the massive innovations that are being built in DeFi on a central bank digital currency. My belief is that if the government goes in this direction, it's probably not going to be open and programmable at the outset, simply because there's more concern than there would be with a closed system where it's running among trusted participants like a number of banking institutions. But the end state of this would be if you have a standardized digital currency that can go anywhere and that's more easily programmable, you're going to have a really efficient financial system.
Robert, I just want to touch on some DeFi trends. Gauntlet is a risk management and analysis firm. They're working very deeply with Compound. It's one of the early examples of business to DAO, B2DAO relations. And Compound DAO has also hired some auditors after their exploit last year. So just wanted to get your thoughts on the B2DAO trend. And then as well, you also run Robot Ventures. So what kind of trends are you investing in terms of DeFi this year?
Yeah, that's a great question. So DAOs in general are relatively new. A couple years ago, we had the DAO, which was the first DAO. And then we had, a couple very early DeFi DAOs like MakerDAO. What we're seeing now is that the DAO ecosystem or the protocol ecosystem is maturing significantly. And these protocols and these communities and these DAOs are amassing extremely large treasuries, extremely large protocols, and extremely large ecosystems. And I like to say that there's, really just two directions that, innovation goes: bundling things and unbundling things. DAOs really, in a lot of ways, are unbundling corporations. And there's a lot of specific services that these DAOs need, like risk analysis, which is what Gauntlet's providing, or security auditing and consulting, which is what firms like Open Zeppelin are providing. You're going to start to see more and more professional service firms that are created to support DAOs in all the different things that they need: hiring, treasury management, things like this. And so, DAOs as a form of organization are new but growing rapidly. And I think over the next couple of years, we're going to see, really professionally run decentralized organizations that move, with a lot of speed, but a lot of precision.
2022 could be the year of the DAO. Robert, we got to end it there, but thank you so much for joining us. That was Compound Labs founder, Robert Leshner.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Cryptocurrencies have become a hot topic again in Washington, this time for their potential role in helping Russians evade sanctions. Joining us here to talk about this in greater detail is Carole House, Director of Cybersecurity and Secure Digital Innovation at the White House National Security Council. Welcome, Carole.
Thank you for having me. Excited to speak to you.
Excited to have you here. Couldn't think of a more appropriate guest for this topic. So let's just get right into it. We're hearing a lot these days of, concerns from lawmakers and various people about cryptocurrency being used by Russians to evade U.S. or Western sanctions. And at the same time, we have, people in the cryptocurrency community saying that those threats are wildly overblown and, there's no real evidence that the cryptocurrency can be used at any massive scale for sanctions evasion. So I would just like to hear your personal view on how real a threat is this? How real is the threat of crypto being used to evade sanctions?
Yeah, I think it's a very fair question. As with any other technology or financial system, cryptocurrency can be exploited when proper controls are not integrated into the system. The current greatest vulnerability for illicit finance in cryptocurrency is an insufficient international regulatory regime for cryptocurrency and applying anti-money laundering standards like the FATF has put forward. So we've seen that cryptocurrency can and has been used by rogue nations before as a vehicle for evading sanctions. The U.S. government has previously taken action against that kind of activity. We've seen that against North Korea's cybercriminal activity and even in relation to Venezuelan activity. But while cryptocurrency has been used in such instances, I would agree that the scale that the Russian state would need to circumvent the expansive sanctions that the U.S. and the international community have placed upon Russia for its unprovoked aggression against Ukraine would make it not serve well as a primary tool, however, likely as a suite suite of tools and something that can be used. And because of that, I think that really led to the G7 making its statement recently, pointing to the fact that we see that this could be a potential loophole that might be leveraged by elites, especially, and we will make sure that we all take action and implement measures that will better detect and interdict any illicit activity and impose costs on any illicit Russian actors using digital assets in that manner.
So what are some of the measures that you think are appropriate on top of the measures that are already happening, right? So you have Coinbase, for example, saying that they've already blocked, tens of thousands of wallets that they've seen as problematic. And so what additional actions need to be taken? Because then you sort of run across that line of like, how do you avoid punishing just sort of ordinary users or people who are not, making illicit transactions?
Yeah, I mean, I think to a certain extent, the industry that to an extent, especially the U.S. regulated cryptocurrency sector, continuing to implement their anti-money laundering controls, leveraging the red flags that FinCEN just published related to Russian sanctions evasion, including potentially use of virtual currency. So I think just continuing to implement that, flagging those transactions and reporting it to appropriate authorities, including law enforcement and the Department of the Treasury. I think that just continued vigilance on that front and information sharing between industry partners also that will help them better detect that activity and learn when controls are being circumvented. Just continued vigilance on part of industry, and then the U.S. government will continue to take action with industry also to share relevant information where we can, and then working with international partners to interdict any illicit flows.
When talking about the Russian sanctions, some folks say, there are some Russians who do not want this war to happen and that, a lot of them have to flee and they're the ones who are going to be affected by the sanctions very much so. And so some folks are saying, they shouldn't be punished. I wonder what your thoughts are on that subject.
Gotcha. Well, I think I would end up deferring back to the remarks that the president and other White House leadership have pointed to, which is that we are looking to impose costs on the Russian state and Putin and all those who have benefited from the regime that has taken this aggressive action and resulted in such, in such terrible and egregious harms. And victimization of those in Ukraine. So I think that we're going to continue to try to impose those costs on those who are responsible and make sure that we figure out where there's appropriate action to make sure that we're not allowing the Russian state to have access to emerging technologies and figure out where we should continue to isolate them from the global financial system. So I think that you've seen that our actions have imposed a lot of costs on those actors, and I expect we'll continue to move forward, and we'll see how Russia decides to react. But on the cryptocurrency specific front, I think that we'll just continue to monitor for any Russian individuals or elites, as well as any wider scale use. If that ends up being a means that the state tries for evading sanctions.
So, given that this has become, more and more of a topic, especially in light of sanctions, do you get the sense that the mood is changing in Washington? I'm just curious of the perspective from where you're sitting. Are you sort of seeing more concern over cryptocurrency in general? Do you think that, we will see Washington or Congress start taking a harder line on cryptocurrency because of these concerns about sanctions?
Yeah, so I do think that we're seeing some expressed concern, right? Like that is a key issue for us. We're imposing costs for good reason to try to change this behavior and levy consequences for this war of choice against Ukraine. But I think that you're seeing that manifest potentially in some interest on the Hill and, of course, across administration leadership. And you saw that acknowledged in the statement in support of the recently issued executive order by the Secretary of State. But I think that more appropriately, I'll pivot to the executive order on ensuring responsible development of digital assets, because I think that's really the main vector that the administration is taking on digital assets, which is a balanced one that both recognizes some of the potential benefits for these assets, but also acknowledges that appropriate controls are not being built into these systems systemically and that we want to make sure that we can promote development of the assets in a way that protects Americans, businesses, protects against financial stability risks overall. So I think that that calibrated approach of understanding the risks, making sure that we're implementing proper controls and protections there. But then also, once you establish those protections, can allow innovation to potentially grow and thrive in the digital asset space.
Earlier I mentioned that Ukrainian President Volodymyr Zelensky had signed in a bill legalizing virtual assets. And, Ukraine is number 4th in terms of crypto adoption. The United States, with President Biden signing the executive order, is just about mulling it over and seeing its role. So I wonder, where are the opportunities in crypto that you see?
Yeah, first, I'll just highlight that in the United States, cryptocurrency use is legal and has been legal forever, and it's been regulated for over a decade now in the United States. But I see a lot of opportunity to potentially drive aspects like financial inclusion and efficiencies in payments. There's also a lot of opportunities to try to figure out how we direct the ecosystem in a more responsible manner related to climate risks and consumer protections. Most of these systems were built without integrating features like market protections and sanction screening and digital identity. All of these things potentially have technological or governance controls, though, that can be implemented into them that will help to create a financial system that I think Americans will be potentially more eager to be involved in if they know that those protections exist and that the system is developing consistent with democratic values.
Is there interest or enthusiasm toward a digital dollar, a CBDC?
No, certainly, at least in further examining it and making sure that we're prioritizing the study and development for the technology, the expertise and capacity that we would need to launch one once we finish determining whether or not it will be in the national interest. The president in the executive order placed the highest urgency and communicated that to the U.S. government, executive agencies, as well as financial regulators like the Federal Reserve, on how important it is for us to examine fully what it would take to develop a digital dollar or a U.S. central bank digital currency, and then trying to figure out how we would do so in a way that respects democratic values. I know privacy was discussed in the previous session, and those are the kinds of things that I know the Fed has been looking at for many years, trying to figure out, like, how do you do an American CBDC? What does that look like? How is it different from what other types of regimes would potentially use? How do we protect against authoritarian state surveillance, but also have controls against illicit finance, as well as financial stability issues that need to be addressed? All of those are the kinds of things that will have to be considered in determining whether it's in the national interest and then what an American CBDC would look like.
Carole, just returning to this national security sanctions evasion question. So one of the common arguments that people in the cryptocurrency industry are making is that actually, in a lot of ways, cryptocurrency in some ways is because it's so trackable and because you can see transactions on the blockchain, it actually is, in a way, sort of good for these security purposes, right? In the sense that, there's this kind of like common mythology among people that cryptocurrency is like so dark and murky, but in reality, it's actually very trackable, and it's more trackable than cash. And so in that sense, like, it's almost like, not better, but if a criminal is using cryptocurrency, they're more likely to be found than if they're using, a different method. I'm just curious how you respond to that comment.
Yeah, I'm definitely familiar with that issue, and I would say that it all really depends on design. Many of these assets do use public ledgers, and you're right that cash transactions do not post on a public ledger. I would also say that cash transactions do not allow for instantaneous significant value transfer cross-border, like in a very short period of time. So there's ways where, depending on the design of the system, you could have the risk features of cash and wire transfers existing simultaneously. Or you have some mitigants, like, for example, them being publicly traceable. There's a lot of things that it all really depends on its design and implementation. Like, not all ledgers are unobscured. Of course, there's other obfuscation methods that individuals could use, like mixers and tumblers, or moving between different blockchains and other anonymity enhanced cryptocurrencies. So I would say that it does depend. I agree that, like, there are some benefits and there are some risks, and if you implement proper controls, I know I talked about it before. The biggest vulnerability is really that there isn't, without AML regulation internationally, then there may not ever be an identity. If you see it go to an exchange overseas that's not sufficiently regulated and not implementing AML controls, my ability to see that it goes to that exchange doesn't actually help me hold any entity accountable if I can't figure out who was there. So it's so important to in place those critical controls that we have for good reason in the financial system. But I agree that there's a mix of both benefits and risks.
Mm-hmm. When I think about some of the reasons that crypto has become popularized, there's a lot of philosophies, libertarianism, a lot of privacy advocates, each having their own kind of angle at it. So I wonder from that perspective, what kind of philosophy on crypto do you have and see its value?
No, well, I'll stay away from my personal feelings, but I'll say that as a civil servant and having worked at FinCEN, that was my prior role where I led cryptocurrency policy there, getting to work on the regulatory front and starting conversations many years ago where there were a lot of individuals and representatives in the cryptocurrency sector speaking to how it's impossible to know who's on the other side of a transaction or how you can't regulate something that's decentralized. I think there's been a really great recognition and maturation in the cryptocurrency market where a lot of folks that are providing very centralized services on top of decentralized platforms recognize that it's critical to put in place these protections. So to me, I think that my perspectives are really on the ability to shape this. Just like any technology, it all depends on how you design it and how you build into it. And as an American, I want a financial system that has proper protections for me if I've been defrauded or my funds have been stolen. I am not interested in working in a financial system that allows for terrorists or rogue nations to very easily launder their proceeds. So I'm very excited and for what the president has directed under the executive order, and would just encourage the cryptocurrency sector to consider to follow the president's lead and the directions he's given to U.S. government agencies, and consider how they can build in through technological innovation, government governance, and other controls the types of protections and democratic values that the president underscored.
Certainly. Well, we're looking forward to seeing how those agencies work together and what they come up with. Carole, thank you so much for joining us. Appreciate your insights.
Thank you.
That was White House National Security Council Director of Cybersecurity and Secure Digital Innovation, Carole House. All right, coming up, we've got a crypto markets update with institutional trading platform Falcon X. Checking in on Bitcoin, the latest Bitcoin price XVX index currently at $41,072. Bitcoin is up about 2% over the past 24 hours. The CoinDesk Ether price ETX index at 28.15, ETH climbing about 5.7%. The DFX CoinDesk DeFi index is at 247. DeFi is soaring over 7%. The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Joining us now to discuss the crypto markets is Raghu Yarlagadda, CEO of Falcon X. Welcome, Raghu.
Great to be back, Emily.
I should say welcome back, Raghu. So let's talk about the big markets topic of the day, which are these interest rate hikes, which, actually they've been the hot topic for a very long time. It's been a little bit anticlimactic in terms of the response. People were anticipating, I think, a greater response from Bitcoin and other crypto markets. What do you think the reason for that is? Do you think it was already priced in, or do you think this concept of inflation and interest rates driving Bitcoin prices is a bit overblown?
Yeah, over the last 24 hours, had numerous conversations with a variety of institutions, Emily and Christine, whether it's hedge funds, prop shops, or crypto native funds. And the consensus, the insight that we gathered so far is a lot of institutions predicted and priced in. When I say predicted and priced in, they were expecting about 6 hikes. 25 bips hike is in line with what they're seeing. 1.9% effective rate towards the end of the year. I think all these things were very much in line with what the markets were thinking. Now, with that said, one very interesting insight that came up as we spoke with these institutions is this core notion of the inflation itself, meaning people expect that inflation is going to be definitely the Fed policy will help mitigate some of the concerns with inflation. But there are opinions from institutions that all of the inflationary concerns are not going to be mitigated right away. It's going to take time. And when I push them in terms of why do they think the Fed policy alone is not enough, there was some very interesting research that a lot of these institutions, including Falcon X, we dug deeper over the last 24 hours. And that is, if you look at the inflation that's happening now, it's very analogous to what happened in the 1970s. And again, the very same ingredients were there. The ingredient of supply chain crisis, geopolitical risk, massive money printing. And when these three ingredients came together in 1970s, it was Fed policy definitely helped, but it was not the only reason ultimately why inflation got controlled. It took time, right? Expecting inflation is going to be here for another few years for sure. There is definitely interest on Bitcoin and Ethereum being distally scarce assets and eventually inflationary hedges. So when we speak with institutions, that's what they're pointing towards. Inflation is here to stay. If inflation is here to stay, digital assets, specifically Bitcoin and Ethereum, have a role to play.
It's interesting you say that because there are going to be 6 more rate hikes, and the Bank of England also announcing that they're raising rates. So what will it take to curb inflation if you don't believe that this will really have much of an effect?
No, I think it's a good point, Christine. My point was not that it'll not have much of an effect. It'll have effect, but it's going to take a long time. It's going to take 1 to 2 years, which is what the Fed alluded to yesterday as well. So, but to answer your question specifically, while it's going to take time, what is going to ultimately help with curbing inflation in addition to the Fed policy? I think supply chain stabilizing, the COVID variants and the vaccines around that, stabilizing, and the geopolitical risk that we're seeing with Russia and Ukraine, that not spilling over to many other countries.
Right.
I think with the combination of those three things with the Fed policy is going to tame inflation, is what we think.
Could you explain to me, the crypto market reaction? Because we're actually seeing gold go down, but the crypto markets are up. And one would think that, the Fed being more aggressive with interest rates would be a negative thing for crypto, but it's looking pretty green.
It is interesting, and we were double-clicking on that, Christine. And I think there are two factors that we're uncovering as we're speaking with institutions. The first factor is the Fed policy to control inflation is predictable. It's healthy. It'll have an effect, but it'll take time. Given that inflation is going to be there for the next 1 to 2 years, now digital assets could be very interesting in an inflationary regime, whether it's generating yield or the digital scarcity that helps digital assets act as an inflationary hedge. Now, that is one factor. The other surprising factor that, again, this is anecdotal, we just heard this from 2 other institutions, which was very interesting, is the notion of Zelensky talking about, crypto being a part of that economy, aka legalizing, crypto. And the interesting use case under that, and this is something that we have to double click and validate further, if there were an economic collapse, or if there is a hack on the massive financial institutions in that country, Bitcoin as a quote-unquote bank can't be hacked. So that provides a nice insured rail for the economy to still function. Is an argument. It's a very interesting argument that we heard over the last 24 hours. And a combination of these two reasons coming together, we've seen some institutions take a good bet. That's probably pushing the market, green this morning.
Interesting. In the meantime, we also have a hot war going on in Ukraine, as you mentioned. And Fed Chair Jerome Powell talked about how that could lead to a tangled supply chain throughout the world. We're coming off of a pandemic. We're seeing runaway inflation. Do you see stagflation ahead? And if so, what would that mean for the markets?
It's a very interesting question. I want to break that down to the broader markets and then crypto markets. With regards to broader markets, definitely, including crypto, in the short term, we expect choppy waters ahead. It's like a lot of different variables are at play. So we are expecting choppy, volatile markets, especially as liquidity in the markets is thin, Christine and Emily. Small trades are actually moving the markets, both in equities and also in crypto. And that volatility is going to continue till things stabilize a little bit. We expect 2 quarters. But what's exciting after that, right? A case against stagflation If you look at crypto specifically, one of the underlying powerful forces, which is not very talked about, is we estimate about $15 to $20 billion worth of institutional capital, whether it's like venture capital firms, crossover hedge funds, waiting to come into digital assets over the next 2-3 years. And that is a tremendous force that's going to shape industries, right? I mean, it helped shape the internet in the very early days in the 2000 to 2005. When you have $15 to $20 billion on the sidelines waiting to come into the ecosystem, you see great products being built. This is the time to build products, especially as the market moves sideways, having survived, a couple of different corrections. The second thing is like the customer education is getting better. As companies are profitable, as companies are actually raising money, the customer education is so much better than where it was 3 years back, including the Super Bowl ads and the excitement that it drew. And the last but not the least is like it's attracting strong talent coming in. So if I look at crypto specific to your question, Christine, in the short term, it'll be choppy, but in the mid to long term, I actually am quite optimistic on the underlying currents beneath crypto.
Okay. Raghu, we got to end it there, but thank you so much for your analysis. And yes, we're going to expect some volatility ahead in the crypto markets. Thank you for joining us. That was Falcon X CEO Raghu Yarlagadda. All right, that's it for First Mover. Thank you, Emily Parker. I'm your host, Christine Lee. Coming up, CoinDesk TV is live streaming a hearing on the role of digital assets in illicit finance, hosted by the U.S. Senate Committee on Banking, Housing, and Urban Affairs, with special guest witness Michael Chobanian of KUNA Exchange, who you've heard on First Mover before. That's at 10 a.m. Eastern. Also, stick around for the hash at noon, and all about Bitcoin at 3 o'clock. You're watching CoinDesk TV. Stay tuned for the daily forecast as well to see what's happening in the Asia crypto markets.
South Korea elected its first crypto-friendly president last week. A lot of election promises for crypto investors, but what can he really deliver? Welcome to the Daily Forecast, March 17th, 2022. I'm Angie Lau, editor-in-chief of Forecast, covering all things blockchain. Well, President-elect Yoon Suk-yeol pledged to institutionalize crypto and advance Korea's crypto industry during his campaign. Well, in a forum today, the industry has set out ideas on how exactly those promises could be developed into real-life policies. Why this is an interesting development for the rest of the democratized world. We're going to take a look at that story plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Well, let's kick off with a huge crypto policy decision from Ukraine. It remains a country in conflict, and now it's taken a big leap that could help with support by legalizing cryptocurrency. Ukrainian President Vladimir Zelensky has signed a virtual assets bill into law. A crucial move as the country is receiving millions in crypto donations for military and humanitarian aid in its war against Russia. The Ministry of Digital Information says the law determines the legal status of crypto assets and that it will be regulated by the National Bank of Ukraine and the Commission on Securities and Stock Market. In a tweet, the ministry added that the law allows foreign and domestic cryptocurrency service providers to operate with legal accounts in Ukrainian banks. To date, the country has received at least $80 million in crypto donations from DAOs and direct transfers to the government's crypto wallets. Now, from a major policy move to a big business decision, Chinese crypto mining rig maker KUNA has announced plans to buy back up to $100 million worth of its own shares over the next 2 years. KUNA chairman and CEO Nangeng Zhang said the company is aiming to drive value for shareholders with the move. It follows completion of the Nasdaq-listed company's $20 million repurchase program that started in September of last year. In a separate statement, the company provided a warning over an impact to its business outlook due to machine delivery delays caused by the resurgence of COVID-19 in China. You can find those stories and more at forecast.news. Well, over in South Korea, crypto pledges were key for President-elect Yoon Suk-yeol while he was on the campaign trail. And today's policy forum on the next government's digital asset policies organized by the Korea Society of FinTech Blockchain, saw the industry getting together to discuss exactly how those promises could be fulfilled. Forecast's Danny Park followed all the action.
South Korea's digital experts gathered at the National Assembly earlier today to discuss how President-elect Yoon Suk-yeol's crypto campaign promises could be implemented. Investor protection was high on the agenda, as was a look at the potential for reversing the 2017 ban on initial coin offerings. Kim Gap-lee of the Korea Capital Market Institute says investors need to be able to make informed decisions.
발생하지 않았을 문제점이 굉장히 많습니다. 간단히 말씀드리면요. 먼저 투자 정보가 굉장히 불충분해요. 그러니까 발행 공시 측면에 있어가지고는 백서가 지금 다 영어로 써져 있어요. 그러니까 국문 백서 발행 의무화되는 것 굉장히 중요하고.
Kim added that companies should be obliged to reveal any large-scale crypto investments or changes to their digital asset portfolios. Currently, this is something that is not mandated by law. Back in February, investors suffered after the South Korean game developer WeMade sold around $200 million worth of its native token WeMix without prior notification, causing both the token and company stock prices to plummet. Meanwhile, the head of crypto exchange Upbit's Investor Protection Center followed up on President-elect Yoon's pledge to reapprove ICOs in the form of initial exchange offerings.
그런 과정에서 분명하게 정보 제공 문서를 밝히고 백서 형태로 그리고 그 백서에 밝힐 내용은 규제 당국이 템플릿으로 정해줍니다. 그리고 이것을 심사를 통과하고 그 발행자도 서약합니다. 나는 사기치지 않습니다. 제가 아는 범위에서 정확히 적었습니다. 기존의 백서들 맨 끝에 오면 책임 안 진다는 표현들이 있죠. 정반대되는 겁니다.
And finally, Lee Soo-hwan from the National Assembly Research Service pointed out that new policies for digital assets should embody environmental, social, and governance elements, especially with rising environmental concerns over crypto mining. We'll be keeping watch to see how things progress once Yoon is inaugurated as South Korea's president on May 10th. For Forecast, I'm Danny Park.
Well, Joe Biden's much-awaited executive order on cryptocurrencies lays out a broad strategy for how aspects of the crypto sector would be addressed. But does it do enough to answer the questions that market participants have? Well, let's bring in Mark Lamb right now, Chief Executive Officer at CoinFlex, a leading crypto derivatives exchange and yield platform, for his take on this landmark order. It's great to have you, Mark.
It's great to be here.
Okay, so when it all came down, the White House order outlined 7 key areas of focus. Let's see if I can recall them all. Consumer and investor protection. We have financial inclusion, among others. What's your take here? Could this be a catalyst for new products, for new coins?
The biggest thing about this executive order is that the language is extremely positive, and the tone that they're using is that the U.S. wants to become a leader in the crypto field. And I think this is just because we're seeing more and more competition for regulatory frameworks and places for entrepreneurs to set up crypto businesses abroad. And so the U.S. wants to actually be a home for that type of activity. And there's no new regulations that were actually laid out. There's no new specific policies, but it's really a call to action for the U.S. and different regulatory bodies within the U.S. to put on a united front. In a lot of countries, you go to their regulators and there's one financial regulator, maybe 2 that you're dealing with. In the U.S., there's more than 60 different regulators involved in regulating crypto businesses today. FinCEN's been regulating crypto businesses for 6-7 years, and that's been going really well. But you have other parts of the U.S. government where the regulations, the policies are not clear, or it's a policy of regulation by enforcement rather than by specific published policies. So this call for a united front, this call for cohesive regulation, clear guidance to the industry, this is really exactly what companies are looking for.
The order also spoke about national security risks posed by digital currencies, and that's something we've all been talking about extensively, Mark, with the Ukraine crisis and worries that crypto could be used to evade sanctions or route money by Russian oligarchs. Do you have any thoughts there specifically?
I think the the powerful thing about what we've seen in crypto in the most recent use case is that for large scale money laundering, it's a pretty terrible tool. The public trackability of blockchains makes it extremely unwieldy and difficult to use for that. And I think other traditional mechanisms of banks and payments are basically facilitating the lion's share of that. Whereas what you do see is for the average everyday users of money in these economies, Ukraine, Russia, other parts of the world that are affected by war and terrible outcomes, they turn to crypto as kind of this refuge of payment mechanism of last resort, and so they're able to use crypto as a way to solve their own day-to-day problems. And for large-scale criminal activity, it's just unworkable. And so it's really, I think it's this is the reason why the U.S. government has told exchanges not to stop processing trades for Russians.
The individual is still at least protected somewhat. Let's talk about the White House here, also talking about exploring a U.S. CBDC. We know that China is almost, light years ahead, almost in the final phases, if not already ready there. What's now the next step here for the United States, though, especially as non-government stablecoins have drawn questions from regulators, most recently Tether for not being sufficiently backed by USD. Do you think that there's a challenge in play here?
I think there's a huge opportunity because US dollar stablecoins are proliferating the dollar further afield. And so the dollar has this network effect and sort of reserve currency status as a payment mechanism for oil and a payment mechanism for all kinds of transactions and global settlements. But it's for retail transactions abroad, they're still mostly using their own local currencies. But now with stablecoins, US dollar stablecoins, people are using real US dollars for local trade. The question is whether they go from a regime where there's lots of private stablecoins competing to one where the government is also throwing its hat in the ring. And I think the biggest question in that regard is, are they willing to, in some sense, disintermediate the banks? You see this in the Fed's policies papers around stablecoins, where they talk about credit disintermediation. And they want banks to be heavily involved in credit disintermediation because they know that, facilitating credit lending activities, all the activities of normal banking that finance the economy aren't something that the central bank can do itself.
Mark, always a pleasure. Thanks so much for joining us today.
Thank you. Great to be here.
And that's the daily forecast covering the latest developments in blockchain from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.